Let's get across the market open now. Zach Riaz joining us from Banyan Tree Investment Management. Zach, welcome. Good to have you back on the show. Can we just start with the broader outlook of what you're seeing at the moment? This is everything rally, isn't it? Gold, Bitcoin, equities. You can't fight this momentum, can you?
You can't fight this momentum, but what's very interesting, Andrew, is that we've been saying, we've been in that if there was a previous era that we could compare the current market conditions to, was 1999, 98, 99. And look, this is not something we came up ourselves. A lot of people have pointed this out. But what's very interesting is these bunch of deals that OpenAI is announcing. It's just, they're basically handing out money to everybody, right? So overnight, AMD, they're basically shoring up chips from all over. AMD, I think, climbed by 30%. And correct me if I'm wrong, I think its market cap went up by $80 billion. So remember the 2000s, the blow off rally towards the end. I feel like it almost feels like we're there now.
Well, in fact, I was reading Paul Tudor Jones saying exactly that. It's like October 1999. I think.
Yes, correct. Yeah. So, we've been waiting for this, and I think we're kind of in this now. And so, look, the CapEx announced and the amount of dollars that's being thrown at this AI announced is staggering. And yes, someone's CapEx is someone else's revenue. But it certainly feels like you want to start to become a little bit more cautious. Like I was saying before, momentum is a trade that's been very profitable. We prefer to continue to take some profits along the way. But what's very interesting is that you start to see a lot of M&A coming in. You may have noticed in utilities, BlackRock, through various subsidiaries, made a $6 billion play at AEL, which is, I think, a gas utility. Their global infrastructure partners is also looking to make a bid for $38 billion bid for AES. Again, back to the same thematic, people shoring up energy on the back of obviously what's to come from this cloud and AI thematic. So a lot of activity happening, but yeah, my point is this blow-off rally just almost feels like the one that we've been saying and waiting for.
Meanwhile, what are you seeing in bonds at the moment?
Yeah, it looks very interesting. And look, a lot of people continue to ask for safe havens, and this is why I think gold continues to rally. But look, this is a really interesting chart because despite all the talk around central banks around the world cutting interest rates, which should suggest that interest rates rates should go down, they've actually been increasing overnight as well. This is basically breaking out the term premium, which is the blue component, and the long run short term rate is basically effectively another way of saying the neutral rate. Now, long story short, what this is showing you is that the increase in bond yields across the globe, or certainly the developed markets, has been driven by term premium. And this is what we've been saying. Look, another way of kind of interpreting this is that the fiscal largest that a lot of these guys are trying to play out. I mean, the new Prime Minister of Japan also wants rates low, will not cut or increase anytime soon, and she wants to be all pro-growth. And that's led to Nikkei obviously up 5%. But this is showing you the term premium in bond yields, sovereign yields, is what's driving the yields higher, despite all this chatter around interest rate cut expectations across pretty much all these markets over the next 12 months.
Well, in fact, let's go to that chart, those expectations of where rates are likely to go.
Yeah, so over the next 12 months, the next chart basically shows you what the consensus is expecting in terms of rate cuts. Look, Japan is the only one that's expected to increase for obvious reasons, but look at Euro, Australia, US, Canada, all down by between 25 to 100 basis points. So, rates are not reacting to these rate cuts anymore, and I think that's a very important part that investors from an asset allocation point of view need to understand, but also from an equities point of view, because if long-term bond yields start to become unanchored and start to really rally, that's going to have implications for equity valuations as well.
And then we take a look at what's going on currencies. The US dollar, of course, has been in the doldrums, but is it mounting a bit of a comeback now?
Yeah, look, two very important, there are about four real key factors that you need to watch for when you want to do your asset allocation, and rates we just spoke about. There's upside risk to that. And currency, US dollars more specifically, is another part of that. Obviously, a higher US dollar acts like a tax on the rest of the globe, and a lower US dollar acts like a stimulus measure for the rest of the world, including ex-US equities. And you've seen it's been on the decline for the better part, well, since the start of this year. But I think what's happening in France, in Europe, obviously there's been a big shift towards non-US equities since the start of this year, or since Liberation Day. And obviously that's been reflected in the US dollar. I think there is now ample reasons or potential catalysts on the horizon which could see the US dollar mount and come back. The number one being is that, look, despite all the chatter around US economic growth, it's very resilient. The resilience or the economic outlook for Europe and other parts of the world isn't all that much flashy versus the US. The second part is positioning. You really need to focus on positioning, and both yen and the euro are significantly overbought right now, whereas the US dollar has more shorts on. So I think there's a few catalysts that are gathering momentum which could see the US dollar move higher. Obviously, we know what's happening with the France from a political perspective. So I think this is another chart that needs to be worth keeping an eye on. And if we see a dollar starting to rise, US dollar start to rise, that could be headwinds for ex-US equities. So with that in mind, we have started to take profits in our multi-asset strategies on some of the EM rally that we've experienced and ex-US equities that we're exposed to.
So Zach, all that said then, in terms of your positioning, I mean, are you taking profits elsewhere? We talk about gold, for instance, where equities are heading at the moment. Would you rather be in the US than Australia? What are you looking at?
Yeah, look, more broadly, from an asset allocation point of view, we're taking profits in risk part of our portfolio and putting into alternatives. Actually, we've been putting into a bit of currency. And so we've got exposure to high US dollar in our alternatives. But then there's also other alternatives, both alternatives to equities and bonds. So within our multi-asset strategies, that's what we're doing. Within our equities, honestly, we're just looking for opportunities where there's earnings momentum and not as well discovered by the market yet. So, and it's becoming difficult, it's becoming harder. One area that I will point out is the REAs of the world. There's a couple of stocks like Rightmove, Auto Trader in UK. There's another company called Hemnet in Sweden. There seems to be a bunch of these stocks that are exposed to online classifieds within the property sector that have come off recently, and I think it's on the back of basically concerns about economic growth and the housing market. So there are pockets within the global equity space that are still representing some value, but it's becoming harder and harder.